Alright, so this was last Thursday. We had this massive drop during the New York session. All we're going to line out right here is the previous day's low. I'm going to label it quickly, previous day's low right here. We have the PM session high. This is really the closest high we have other to those ones over here. So we're simply going to use this as buy-side liquidity. The PM session high. The AM session high is somewhere right inside here. We could use this level. But overall, I would say we could use this midnight open level right here. Oh no, this high from the previous day, so from Thursday's London session right here. Also as buy side. So those are going to be our buy side targets. The next buy side target for me really would be the New York AM session high right here. But this is pretty far away, so in case we're going to go above those levels, we're going to label them out. But as of right now, I don't think we really need them. And yeah, the sell side targets would obviously be the previous day's low and the London session low from Friday the 7th of July, NFP Friday. So we're going to label them as sell side. And this is pretty much all we have to do on our 15-minute chart. I don't really want to do much more. We could label out those fair value gaps. We could use our Fibonacci tool to roughly see where we're currently sitting at. Right here is our equilibrium. 0.75 retracement level, but yeah, that's too much for me personally. I'm simply going to label out the midnight open because this is going to be a nice reference level right here. Usually use a dashed line right here. And yeah, from here on we can break it down to the 5-minute and see how NFP plays out. I'm not watching NFP or anything else playing out on a lower time frame than a 5-minute basically. Keeps it simple, pretty much straightforward. What's ever going to happen is going to happen now anyway. So we will just wait until 8:30. And at 8:30 we successfully take out this buy side liquidity. Alright, so now we really want to see what price is going to do after it took out this buy side liquidity. We still have that midnight open, so we cut right straight through it, leaving behind discounts. And on that very next candle, we can see a rejection once we took out those buy stops. Let's continue. And right here at 8:40, we continue and almost reach this sell side liquidity, which is going to be the London session low of Friday. So this is obviously now my silver bullet idea. I want to get into this trade to take out the sell side once we have buy side cleared. Basically, what I want to see is this whipsaw pattern being played out. Wherever we continue afterwards, I don't care about that. I want to target this sell side liquidity because I believe this is going to be the next draw on liquidity. We took buy side, we close again below the midnight open, and we're just a few ticks away from our sell side target. So from here, I drop down to the 1-minute time frame. So now we're on the 1-minute time frame. Here, this is our rejection on the 5-minute time frame, so we can simply drag our premium and discount tool right here. So everything above 50% right here, the 0.5 level, is considered a discount for a short into our sell side target, which would be the London session low here. So, and what do we see here? Now we can actually mark up fair value gaps because now we have our idea confirmed. From the higher time frame, we want to see this whipsaw play out. We could also label this right here as a market structure shift or even up higher right here, but this would be a higher time frame market structure shift. So I'm just going to use that. That's a market structure shift bearish. And now if we label out fair value gaps, we can definitely see this first fair value gap, which is actually in discount. So I'm going to put more weight on this one right here. And we also, if you remember, have that midnight opening level from right here, holding or basically giving some more confirmation to this fair value gap, because ideally right now we would like to see resistance of this midnight open level. We also have a low hanging fruit fair value gap right here, which is below the 50% level, so not ideal in terms of risk to reward for a continuation short. So let me quickly make 2 fair value gaps out of those boxes. Fair value gap. We could also look at a breaker block but it's just this little small candle prior to NFP, so we could therefore go to the 5 minute, look for the lowest down closing candle, which would be this one right here. Don't really like that one, so I'm not going to draw it up. I expect price to be pretty volatile, hitting into this sell side liquidity. So, because those fair value gaps are actually quite big, what I like to do is I like to use the Fibonacci retracement tool, and I draw out the 50% level of those fair value gaps, the equilibrium of these fair value gaps. For me, that's really important because I like to see price ideally not close above this level, and I'm going to do exactly the same thing with the upper fair value gap, because that will offer us a better entry instead of entering right at the beginning of the fair value gap, basically. So let me use that 50% level here as well, and we can see it's just above that midnight open. So now I'm planning on taking these trades, and ideally, let me grab back my Fibonacci retracement tool. Now, just by looking at that, if I were to take a trade on this lower fair value gap, I would take it right here, starting from this level. I would place my stop loss one tick above the candle that created the fair value gap. As we can see, we also have an old inversion right here on the 1 minute time frame. So this should also protect us from this first fair value gap. We have our stop loss one tick above this level right here. And we also have an inversion right there. We cut through this bullish fair value gap, closing below it, not respecting it at all. This tells me that order flow is currently bearish. So we can see lots of confluences around these levels. And yeah, right here, this trade from the lower fair value gap, not in discount, not above this 50% level, would turn out to be a 2.5 risk to reward trade. And yeah, this would be our first idea. And I would also set a limit order right here from the midnight open, pretty much, and place my stop loss one tick above that. And this would be a 2.81. Maybe we can also use the 50% here, which would be a 3.36 risk to reward ratio. So those two trade ideas would be my trade ideas for a silver bullet short continuation into the London low, which is labeled as sell side liquidity. And as we can see already, of course, here we have a fair value gap that could play out paired with an inversion. But in this upper fair value gap, we're not just above discount, not just in discount above the 0.5 retracement level. We also have that midnight open right here at 4445.5. We have this inversion and we have this fair value gap and a 50% level. So ideally, we do not want to see any candle on the 1 minute time frame to close above the midnight open, and basically just wick inside of here. So we will see. I would add maybe 0.25 to 0.5% risk on this first trade and 1 to 2% risk on this second one. Alright, so let's see how price action plays out. We see we do not hit this low. Let me get rid of this retracement tool. And we also see that we are forming equal lows, so we're going to keep an eye on that. So we see prices pulling back. We are now inside the lower fair value gap, and we are triggered into this trade. This trade does not look like it's going to play out. As we can see, we already close above. Let me get rid of this inversion. We already closed above this 1 minute fair value gap. So pretty much right now I would look for inversion, so a continuation into the upper fair value gap or even into buy side, just by price disrespecting this lower discount. So let's see how price is going to continue. We see we are stopped out, and where do we tick to perfectly? The midnight opening level. So this trade already would have been a losing trade. Let's see how we continue. This is our second trade idea of the 50% level of that higher fair value gap. And we see we just been triggered, and we also close above that midnight open. So this would concern me a little bit, but we still have this trade idea in mind. So let's see. We still respect this 1 minute fair value gap. Let me get rid of the inversion quickly. That's the 1 minute fair value gap. We close above the 50%. We now filled it in perfectly. So let's see how price is going to continue. Okay, we haven't closed below it yet. This would be a nice confirmation to see on the road. No, still not. We're starting to hold this inversion now, this bearish fair value gap that we cut through and close above, as support. And this is how I'm continuously monitoring my trade. If I see something I don't like, I would exit my position early. We also have a bullish fair value gap right here, where ideally for our sell side to be hit, and those equal lows right here, we want to cut straight through this bullish fair value gap. Alright, so right here, we've been rejected off that midnight open level. We came above it, we closed right at the midnight open level, and then we closed below it. So now I want to see it acting as resistance. Alright, so we're now right around this bullish fair value gap and this inversion level. And I really want to see price cut through this level to confirm my bias. And what do we get? We cut right through that first fair value gap. We did not close below it, so right now we're still going to wait for one more candle. Note that we're below the 50% level. We're still holding some sort of support, so we're going to wait. And right here, we can see that price closed below this inversion from 841 and also below this bearish fair value gap. So now we could look for this area basically to hold or act as resistance into our continuation trade into sell side. So what we could do is simply place another order right here for the continuation short, for example. Not sure if this is going to play out. I don't usually add to my positions if I'm trading on TradingView, because that's just messing up my average entry. But that's likely not going to play out. We're just waiting for our sell side to be hit. Here, right here, we have a volume imbalance that we could have used as an aggressive entry into sell side. We also close below this little fair value gap right here. If you take a close look, there's a small little fair value gap. We gap below it, close below, and now we have no resistance at all. And we hit our sell side liquidity target. And if you don't like going to a lower time frame for an entry because you might get spooked or you take too many trades, you could have pretty much done the same thing on a 5-minute time frame. So we cleared buy side. We pretty much get a confirmation of that whipsaw pattern. We have that rejection wick with those two equal lows on the 5-minute time frame. Very simple. And once this candle closed right here at 8:45, 15 minutes after the news, we have this massive fair value gap right here. Also lining up with the midnight opening level. We can once again look for our 50% level of this fair value gap, which would be right here. Just going to draw this in. And we can also draw in the inversions if we want to, which would be right here, that first one. And our second inversion would be a little bit higher. Alright, so we're on the 5-minute time frame. Our target is pretty much the same. We could measure that whole range to get an even better entry or idea where the premium and discounts are laying. So we can see right here, that's above the 50% level. So ideally, we could pretty much try a short from this level right here, which is in premium, or so not in discount, for a short into the sell side liquidity. So I wouldn't put too much risk onto this trade. I would rather prefer a rejection of the 50% level. And so now I look, we are inside this 1 hour 5-minute fair value gap. Right here, we're in discount for a short. So ideal risk to reward ratio criteria is met above the 0.5. We have this inversion level right here, this last bullish candle before we reverse down. And we have the midnight opening level sitting right here. So I would pretty much do the same thing. I either try to catch a short of that inversion or the midnight opening level or the 50% of this inversion. Right here, because ideally I would not like to see price, or at least on a 5-minute, close above this 50% level of this inversion fair value gap. So I'd go for the midnight opening level for a potential short. I do the same thing, one tick above the candle that traded this fair value gap right here. Let's get rid of our premium and discount, and I would also target our sell side liquidity, and it's still a 2.81 risk to reward trade. I think on a 1 minute we had a 3.36 risk to reward trade. So let's see what's happening. We already have been filled and we've been rejected by the midnight opening, by this inversion. So we say we already filled in this inversion to the tick on the 5-minute time frame. So ideally, for our idea, we do not like to see a close above this 5-minute fair value gap, and this 5-minute inversion from 8:30, which is the news fair value gap that has been formed. has been disrespected, and now we want to see if it can hold resistance. Let's see. Let's continue. We see we already acted as resistance. We did not close above the midnight opening level right here once. We've already been rejected. We filled it in completely. So by that time, I would have dragged my stop loss down to one tick above this candle, because already we filled in this discount that has been left behind for a run into our sell side liquidity. So right now, if price goes back above this level, I wouldn't be bearish on this setup anymore. So let's continue, and right here on the 5-minute time frame would have been a very simple, no stress trade, in my opinion. Much easier than what we saw on the 1-minute time frame, where you pretty much saw so much stuff going on with inversion, fair value gaps here and there, pretty much stuff I explained in the first 10 minutes of the video. But right here, this would have been the easiest short of a lifetime, even if it's just a, let me go back, one tick above here, 16 tick stop loss. Even if you would have entered on the close of this candle, or of the 50% of that first low, of that 50% of this 5-minute fair value gap right here at 840, just a lower risk to reward ratio. So ideally for a better risk to reward, I would have looked at least for a 2-to-1 risk to reward right here of the close of this candle, of this inversion, of the midnight open, or the 50% level of this inversion. So yeah, pretty simple trade, 3.69 risk to reward, just targeting the next obvious pool of liquidity, which would be the London session low after taking out the PM session high right here.